Hi, good afternoon, everyone. It's been an inspiring day filled with insightful conversations and groundbreaking ideas. And thank you for your enthusiastic participation throughout the sessions. To wrap up the day on a strong note, this is the last session for the day. We dive into a crucial and timely discussion on investment in sustainable cooling, a subject at the intersection of climate resilience and energy efficiency. With rising global temperatures and growing energy demands, sustainable cooling solutions have become more urgent than ever. This session will spotlight key investment opportunities, share success stories, and highlight how these solutions are now being scaled to achieve greater impact. We have our wonderful partners, Climake, for this session as well. Simi, over to you, Simi. Let me just, quickly introduce you. Simi is the co-founder of Climake, with a chartered accountant by background and an MBA from London Business School and 23 plus years of financial services experience. Simi focuses on interventions to support the financial inclusion and climate tech ecosystem in India. So over to you, Simi, and thank you so much for doing this session for us.
Thanks a lot, Ranjana. I'm very happy to be here. So I know it's post-lunch and everyone's probably a little drowsy, but I'm going to start with a short presentation just to set the context on what cooling means to us and what cooling means in the Indian investment context. So I think all of us living in Delhi, but pretty much anywhere in India, don't need to see these maps to know that the country is getting hotter. And what used to be exception, things like days where temperatures exceed 45 or 50 degrees, days where we experience extreme heat, or even wet bulb temperatures, which is temperature where a combination of heat and humidity means that it's unsustainable for human beings to be out in the heat at that point of time, are becoming more and more common. The bad news, though, is that they will become more common. If you look at these charts, it just shows how both, how lethal heat waves as well as the working hours we lose to extreme heat will get much more frequent in the next 10 and 20 years. So this is a problem that we think have gone from being, cooling is optional or cooling is something that's a luxury to something that's a necessity. Yes. It's fine for me if, yeah, that's okay. Yeah, sure. I hope if everyone can hear me, it's fine for me. We think that cooling basically affects 4 key areas of our lives. There's a human impact because if you have extreme heat, you have workforce that's working out in that heat and cannot work anymore. You have the economic impact because you're losing labor hours, work hours when you can't work anymore in the heat. But also it has a lot of impact on supply chains. Especially 2 kinds of supply chains, right? Both food and pharma need to be temperature controlled. Once harvested, if you don't put food in temperature controlled environment, it spoils that much more quickly. And also, if you have extreme heat, you have less arable land, less time to grow crops, which means that we're losing yields in crops like rice and wheat. In fact, by 2030, we expect that we will lose up to 10% of primary crop yields in India. Similarly, a lot of pharma stuff like vaccines tend to be heat sensitive. And at this point of time, it's estimated that we lose about 25% of our vaccines because they're not cooled properly. The good thing is that India was one of the first and is still one of the very few countries in the world to recognize this from a policy perspective, and we actually have an India Cooling Action Plan. The reason this is needed is not only because cooling is important and needs to scale, that's important of course, but also because Think of it this way. If uh, India has to go from 8% air conditioner adoption to a billion ACs that we want to have by 2050, we would need to build a power grid equivalent to our existing grid just to power those ACs. And that's not possible. Which means that the pillars of the India Cooling Action Plan are to essentially make sure that while we expand our cooling footprint, we also make it far more efficient. So basically use less energy to cool our buildings, to cool our supply chains, to cool our homes. So what that means is that the India Cooling Action Plan is looking at reducing cooling demand through making more energy efficient building designs, through more efficient cooling equipment, mitigating the climate impact of refrigerants, but also looking at what are called not-in-kind technologies. These are technologies that do not use traditional air conditioning. So think of district cooling or geothermal, or just new form factors of cooling that can reduce the energy load. Without this, there is no way we can cool India enough to meet all of our economic goals. And I seem to have a blank slide. Yes. So essentially, this is a comparison that we have done in terms of how India's cooling demand will grow in terms of MTOE or million tons of oil equivalent from what we have for 2023 to let's say 2030 or 2050. And if you can see, our cooling load goes from 50 or a little less than 50 in 2018 to as high as 250 or 5x by 2050. We do not have enough energy in this country to power this, which is why what India Cooling Action Plan is recommending is efficient technologies that reduce this gap by at least 20 to 30%. So what does that mean in terms of what we need to invest in terms of cooling opportunities? What kind of cooling businesses we need to build? So to address the 4 impacts I talked about, we basically think of 3 main areas of cooling technologies and investment. One is space cooling, which is cooling, more efficient cooling for homes, but also for commercial buildings, for industrial buildings, for data centers, which are a big guzzler of cooling energy load today. It also includes cold chain and refrigeration to kind of prevent pharma and agri losses, but also new cooling technologies. And we have examples of companies that we work with and know today of working on new insulation materials, for example, new chemistries in terms of aerogels that just reduce or make cooling a lot more efficient than it is today. And I know I'm using the word efficiency a lot, but that's, I think, important for this industry. Because it's not really about can we cool more, but can we afford to cool more? And also as a country, can we afford to essentially expand cooling to those who need it? So pretty much like water we talked about, cooling is as much a technology problem as an access problem today. I'll just very quickly go through these 3 key areas we've identified. As I said, space cooling is one of the key areas where we see a huge potential. Now, space cooling is both commercial, industrial cooling as well as residential cooling. India just has too few air conditioners at this point of time, mostly because so far, air conditioning has been seen as a luxury, but the moment you start having 50-degree plus temperatures on a regular basis, this becomes a necessity. You can't survive without air conditioning or some form of cooling, which means that all estimates show that we'll go from 50-odd million units today to about 7x growth in 2037. The official Indian government target is 1 billion ACs by 2050. Now, what that means is that there is, one, a huge impact potential, but also there's an opportunity not just in selling the best ACs. I don't think that's the gap we are solving for, but basically figuring out how do the billion people or the billion households afford those ACs? Because making the most energy efficient 5-star or 7-star AC is not going to solve any problem if you make it too expensive and no one can buy it. So we are looking at business models that are essentially building cooling as a service, leases, rentals, all of the things that make it easier for a larger population to buy those ACs. Similarly, in commercial and residential buildings, India is in a very unique position today because while most countries in Europe or US are retrofitting air conditioning or HVAC systems, India still has to build a significant chunk of building stock that will exist in 2050. So the opportunity here is not just to retrofit our existing air conditioning systems in commercial and industrial buildings, it's also to do a new thinking on how to design these new buildings more efficiently. So the opportunity is from building a different industry grounds up, essentially. The next one, just want to give you a few examples of what has worked in terms of investment opportunities in these spaces. So in industrial cooling, we're seeing more energy efficient HVAC system providers. We're looking at folks doing experiments in new technologies like passive space coolings. As I said, cooling is a service that makes it affordable for people to buy better air conditioning for homes or buildings is definitely one area that we are seeing businesses getting built in. And finally, as you're starting to look at mega buildings, office complexes, industrial complexes, efficient solutions like district cooling start to come into play. So we've put together some examples of what we think of as successful businesses in this space, and one of them we'll speak to later as part of our entrepreneur panel. But we count in India, I would say at this point of time, maybe 300 startups working on some form of cooling innovation. About 40% of that are focused on space cooling. And that to me is a very exciting space to look at as an investor. Similarly, cold chain and refrigeration, primarily for pharma and agri, is something we think has a huge potential because one, you just need more cold chain and more cooling for vaccines, medicines, and food as it gets hotter. But also, we are losing 25% of our vaccines. We are losing $14 billion a year in food waste. And all of that can be prevented if you can do more cooling. So again, here you have a huge market. We expect that cold chains alone could be a 30 billion odd market by 2037. 2037, incidentally, is where a lot of Indian Cooling Action Plan numbers are centered around, which is why we have a lot of estimates and data around that. This is also one area where, because of India Cooling Action Plan, because of other drivers, there's a lot of positive policy push. There's always been a policy around cold chain and cold storages, but we're also seeing more focus on post-harvest processing and cooling, for example. So what kind of businesses do we see emerging in this? We are seeing solar cooling systems, which are near-farm or on-farm cooling interventions that help stop post-harvest waste. We are seeing more efficient refrigeration technologies for warehouses, as well as trucks. We are seeing off-grid cold storages, as well as, like in most cases in India, to make high capex into an operating cost, offering cold chain as a service. Again, we have Ecozen here today who will talk about what they are building in terms of a very good off-grid cold storage solution, but we also have businesses like Celsius, for example, who are offering cold chain trucks as a service. And finally, I want to spend a couple of minutes on new cooling technologies, which essentially can be very broad and wide. But the way we think about these is that everything that we talked about in space cooling and cold chains is making existing technologies or installations more efficient. But then can you just think about new materials or new kinds of, or new ways of cooling that make it easier to adopt these solutions? So think of it as what I call, for example, phase change materials, which kind of reduce energy consumption for cold chain logistics. Insulation, So all of those essentially are technologies that sit in India's labs today and are building early stage businesses that we expect will grow rapidly over the next decade. So the kind of businesses we are seeing here are things like low carbon refrigerants, new insulation materials, phase change materials, all of these that essentially step away from traditional refrigerant-based air conditioning cooling to look at just how do you do this differently, how do you use less or no energy while delivering efficient cooling. I know I don't have a good Indian example here, but that's not because we don't have Indian startups, but a lot of Indian startups are in early stages of their evolution today. And we're looking at them to scale significantly from where they are to get to the stage where we see large European and American companies at this point of time. That's all I had in terms of context setting, but I think it'll be more useful to hear more in depth about this from the folks who are building this on the ground. So we have two entrepreneurs today who are building two very different forms of cooling businesses. So Arjun from Smart Joules and Devendra from EcoZen. And we'll just go over to talk to them on their stories. What is the cooling problem that you're solving for and what you're building at Smart Joules?
Sure, thanks. Firstly, I'd like to commend the work that you do, Simi. It's amazing. The kind of insights that you provide about the sector, and you've been a great help to the company as well. So thanks for the work that you do. So I represent Smart Joules. We are an efficiency-first company, and we started with a general mandate on reducing energy waste, which is pervasive in every building and factory. And over 5 years, we started focusing only on cooling. So now we only do cooling, and everything that we do is to make cooling systems more efficient. The types of cooling systems that we work with are centralized cooling systems. So we don't work with households, we work with businesses. So, hotels, malls, office buildings, hospitals, pharmaceutical plants, etc., food and beverage, where cooling is 24/7 required, very, very large systems. And what we find is that all of them, bar none, waste at least 30% of what they consume. So before I tell what we do and why, I think maybe I'll just shine a light on why they waste so much energy. Technical reasons are as follows. The first is the systems are over-designed. Okay, the people who design these systems, they have only one incentive to make sure that the cooling is adequate. So what that means is they'll just over-design. So every single cooling system that I've seen more than 1,000 in the past few years, is over-designed. So that's the first kind of reason why energy loss is there. Second is under-investment in CapEx. So, L1 mentality, lowest bidder, lowest first cost. What that means is the cheapest equipment is most often installed rather than the most energy efficient. So that's the second reason why energy is wasted is lack of investment in the best technology available. The third reason why energy is wasted is to do with operation and maintenance. So people who are operating complex cooling systems don't know thermodynamics. And even if they did, the systems themselves are complex, they are dynamic, and they are evolutionary in nature, right? It's not one machine, but a network of machines that need to run together. It's a dynamic system in that the cooling that you need is changing every 5 minutes. And it's an evolutionary system in that every single equipment's behavior is changing over time, depending on how you maintain it. So operations become very complex, and so all three reasons compound. Poor design, poor equipment selection, poor operations, so you end up wasting a lot of energy. So, these are technical reasons. Now I'll come to other reasons, which is market structure reasons. My friend here, Rohit, once told me, and that dialogue is stuck in my mind, incentives are superpowers. Okay, so this is from Berkshire Hathaway, I think that's where you stole it from, but yeah, incentives are superpowers. So if you look at the incentives of every player in the ecosystem, that gives you insights on why do we have poor design, poor equipment selection, and poor operations and maintenance, right? Nobody wants to waste energy, right? But why does this happen? Well, if you look at how a design consultant gets paid, they get paid based on the size of the system, right? Like how many square feet do I have to cool? And there's a fixed fees, 5 rupees a square foot, 10 rupees a square foot if you're a fancy designer. And the actual efficiency of the system over time has nothing to do with their fees. Absolutely zero linkage. So what's the incentive to design energy efficient systems? Hardly any, apart from just having a brand name. There's no financial economic incentive. Now you take a contractor who's bidding to win a project, who's going to execute this cooling system. What is their incentive? Their incentive is to, again, put in a bid which is going to win, which means lowest capex, which means every corner that they can, look at saving of capex from, they will do it. That means they'll choose the cheapest equipment systematically, right? So again, no incentive to invest in the best equipment, right? Now, if you look at facility management companies who are providing the operations and maintenance, what is their incentive? Their incentive is again to win a facility management contract. And what do they win it based on? It's the manpower rate. You want 10 people with this qualification, I'm bidding 2,000 rupees or 20,000, other guy is 19,000, the guy is 19,000 wins, provided you're one of the big companies like Cushman, Wakefield, CBRE, JLL. Everybody knows these brands. After that, it's all about cost of labor. Now, the interesting fact that we look at is that if you look at cooling, the biggest cost is energy cost. 70% or 60% of the life cycle cost of cooling is energy cost. Now, nobody has looked at this, neither design guy, nor the contractor, nor the O&M guy. They're all optimizing their small sliver of the overall cooling cost, right? Design cost, equipment cost, manpower cost, maintenance cost, all of those are getting optimized. But the biggest cost of all, which is energy cost, is not getting optimized because there's no incentive. So as a company, Smart Joules, we bring two innovations to market. The first one is using AI instead of human beings to operate plants. So when you do that, you're actually able to squeeze out every single last joule, right? And that's why we call Smart Joules. And then the second innovation is to align incentives of all the market players through a cooling as a service business model. So what we realize is if you sell cooling itself, the most energy efficient cooling will also be the most affordable. Now, if you take the example of this hotel, they must have spent about 15 to 20 crores to buy and install their cooling system. And they are probably spending 6 crores a year on the energy cost of the cooling system. Right? So if you take it over 10 years, 60 crores of cooling cost, energy cost, and maybe about 15 to 20 of capex. So what we do is we go to these kinds of buildings and say, look, we're going to sell you cooling per ton hour of cooling that you consume. And the energy cost instead of 60 is going to be 30. Right? I may spend a little bit more on capex, but I'm going to cut your cooling energy cost in half. So that becomes something which is very easy for the customers to say yes to. So I'll just stop there. That's enough of an introduction, I think. Thank you.
It is. I'll actually ask one quick question before I go to Devin. What makes you excited about the cooling opportunity or what you're building today? Is it the size of the market? Is it, just how large the demand or the demand expansion is going to be? What are you most excited about?
Well, simple question to answer. I think the reason why we work on cooling is because of the potential impact that we can make on climate, on carbon emissions. So still what makes me most excited is that, we have a vision as a company to eliminate 29 million tons of CO2. And we feel like if we really move the needle on cooling efficiency, that's the fastest and the best way to get there. So, I'm not a cooling expert, right? I'm not a mechanical engineer who's trained in cooling, mostly an environmental engineer who cares about the planet. So we landed on this problem for the reason that there's enough potential to actually contribute quickly to make a dent at a global scale. So that's still what excites the most.
Awesome. And I know I always say that cooling is not a sector or a vertical, it's a horizontal because it spans so many sectors. And Devin, what you are building is very different from what Arjun is building. So would love to hear about the EcoZen story and what excites you about the opportunity that you are building for.
Yeah, exactly. I am what Arjun is not. I am a mechanical engineer who cares about cooling. So for us, cooling has been about creating access to cooling. A lot of people are out there who did not have access to fans, coolers, ACs, refrigerators, cold rooms, cold chains, whatever. And we saw that cooling is a good to have thing. And when we started off, we didn't understand this that well. It was like, if we can make cooling accessible, it can create so much change because that is happening globally. It should happen in India as well. We underestimated the timeline of it. And I think we were chatting, a few of us, when will India graduate from being a cold store country to being a cold chain country. And I think there were three experts, all three of us. One is, like, I can't name them, they may not like it, but all three of them agreed that we don't see that happening in 10 years. So, but when we look at it today, cooling is moving on from being a good to have in the direction of must have. I think the presentation which Simi Klamick actually shared is becoming a reality. We all are feeling the heat. I think people in places in afternoon, even in winters, are feeling the heat of it. And that is a shift which is happening, and even from commodities, even the way the markets are moving, the incomes are moving, I think cooling is now moving in the realm which is a should have. Earlier it was a good to have, now it is moving in the realm of should have. And as Ecozen, we started off by providing access to cooling to the lowest possible segment, which is the agrarian population, to keep their commodities fresh. So I think we picked up the most difficult problem to start with. I think there are many easy problems to go after in terms to address cooling, but we picked up that let's help make the commodities travel in the supply chain in a manner which is cold and fresher. People earn more money in the process. And I think when we have tried to do that, okay, there have been cases where farmers have benefited, and they have been able to sell their produce for 2x the price, double their income, triple their income. But they always thought cooling is a good to have. It is not a must have. So that shift we are now starting to see that is happening. And so I think a lot of you might know Ecozen as a company which makes solar cold room for agriculture. We are one of the guys who use thermal energy storages, solar energy, more efficient refrigeration systems, and so on to deliver this. So it's a technically very savvy product. And now what we are doing as a company is that we are realizing that we have been focusing on one segment, and that segment is benefiting, and we can also take this and add more value to the other segments. So we are now going to Africa. We are providing them with access to refrigeration for keeping the frozen produce. India doesn't consume as much frozen. Africa runs on frozen. And there the commodities would defreeze, freeze, defreeze, freeze, damaging the intercellular walls because of the freezing, and the produce would thaw, that will be a wet drip, the quality will be poor. And the people who are using these, they are seeing that the customers are appreciating the quality and their supply is increasing. More customers are coming to them. Repeat customers are coming to them. So that's the second area where we have started contributing. We would have done around, say, 1,200 to 1,300 installations of the cold room. We would have done around 50 installations of these small solar freezers so far. And we have also entered space cooling in a way at this point in time. And we are providing something which will make cooling lifetime free for users who did not have access to cooling before, who were not going for cooling because it was too expensive, or in terms of operational cost, or who were not able to run it because the power cuts were there. So we have gone on with the product as well to help solve some of these problems. The way we see the cooling space really shaping up is we are seeing it is becoming should have. That is one. Secondly, there are technologies which are coming in. We are seeing thermal energy storages, we are seeing solar, we are seeing better refrigeration systems. Like we are seeing a cross between a cooler and an air conditioner. We are also seeing a different kind of air conditioning system which is better than vapor compression. And all of these can increase the efficiency, reducing the energy consumption by almost 3x, 5x to that of a normal air conditioner. So we are seeing that because of this trend of energy storage becoming cheaper, because of thermal energy storages, solar becoming cheaper, more efficient air conditioning, refrigeration systems coming in, and the temperatures rising. Cooling is at a point of really exploding, in our opinion. And this is what is going to be hot going forward in the future. So yeah, and I think a lot of potential, and one thing which I've learned in my journey of 14 years is that you have to be standing in for the market to really reach at that point of inflection. And as visionaries, we many times get seduced by an opportunity or the product or the customer, and things don't move at first. But eventually, if you are really committed, they actually move. And I think the time for cooling is definitely now.
Awesome. And Arjun, if I could also ask you, similar to what Devin said about the future of cooling, we obviously believe, as you saw in my presentation, that all forms of cooling will increase 7 to 10x from where we are today in the next decade. But working on cooling on the ground, what do you feel about the growth prospects of at least space cooling and industrial and commercial cooling over the next decade?
I mean, I think it's amazing. It's sort of scary, right? Because you know that there's going to be more and more waste, and the thing that we exist to fight is waste. So the pace of growth is actually pretty scary, I think. That's the first thing that comes to my mind, right? You're going to need another India worth of power, an India and a half worth of power over the next 2 decades. How are we going to manage that? So, you know, it's a little bit scary, but I think there's a lot of innovation happening. Like you mentioned, 300 companies in India alone, and I think that number is growing really fast. Like in the last year, I've known of at least 5 new startups which are very promising coming out of the top institutes in India trying to solve this problem. So on one hand, it's scary. You know, as a businessman, I see opportunity. As an entrepreneur, and you also run a non-profit, so I see a lot of opportunity there as well for new companies to come up. So, you know, there's both sides of the coin. Yeah, you know, and when you're actually building one of these facilities, right, it really becomes real. You know, the wastage that is theoretical in our minds, it really becomes real on ground what is actually happening. So I think there is so much room for innovation in this area, and I think what he said makes the most sense. It's going to require a lot of entrepreneurs with a lot of staying power, a lot of long-term commitment, and also investors who share that this is not an overnight success story, right? This is going to take time. If you back the right entrepreneurs, you know, they'll figure out what's the right solution over time. And, you know, both our companies are more than a decade old. And, you know, I'm sure your journey is very similar. In the first few years, we hardly had any growth, right? I mean, I look at myself as a 10-year-old company, and I'm like, well, you know, could have done this in 3 years maybe, but actually, no. It does take that much time to build. And so I think that's the message for this room in particular, right? This is about impact investing. I think a longer-term lens is certainly required. And that doesn't mean that you're not going to get your money back or your returns are going to be poor. No, it's just that you have to look at the time horizon a little bit differently.
Yeah, on that note, both of you have now built sizable businesses. And in the course of the last decade, you have raised a lot of capital, but also different forms of capital, multiple rounds of equity, multiple forms of debt. How has your experience been looking at this from a fundraising and investor perspective? And how do you think the investor, you know, interest and perception has moved for the sector over the last decade?
So I think, in all honesty, raising money initially was decently easy. We didn't want to raise money, and we got the money. That was the situation. I think even now I would say raising money is easy. Okay, so for us, what I think is when businesses are in a stage wherein, you know, you're in the product market fit phase, getting capital for something which is a need. I think the sector has been pretty supportive. The investors have been pretty supportive in funding that. And once you have done the product market fit and you've actually started seeing growth, then the investors are pretty supportive again. I think there is a gap in the middle, maybe when you have to, in the crazy zone, do I have a PMF or I don't? I do. Oh, I don't. So that phase is the one wherein it's really tricky, and that is where I think a lot of companies die as well. So in our case, I think what we did was our strategy was we were never a single pony. We always placed our bets in a manner which was diversified. Initially, it was the cooling business which was pulling in the capital. Right now, it is our controls business which is pulling in the capital, which has scaled up significantly. Okay, and we see as the time goes by, maybe the cooling business is the one which will again pull the capital. We have raised decent amount of equity, maybe something to the tune of $30–40 million, and debt also in the manner of $50 to $60 million in terms of managing the working capital, and that too at decent interest rates and from great investors. So I think that has been what our journey has been. But fundamentally, I feel that if you are able to articulate an opportunity for which the time has really come or is about to come in the next few years, and you're able to put a proper business case out there, validate it, I think the capital should flow, is what my experience has been.
Yeah. So my experience has been frustrating in the short term, but pretty much okay in the medium to long term. Short term, it's definitely taken longer than desired to raise the amount of capital that we've wanted. But let me share a little bit. So when we start a company, the best type of capital is grant capital. There's nothing better than grants. So we started this company 10 years ago. At that time, there was no grant available in India that we could apply for. So we got grants, but we got them from abroad. Just about grants. First of all, very few grants available in India. Most of the capital grants coming from outside. Now, does the Indian corporate structure or legal structure allow you to take grants from outside? No. So we got a grant. The first money that we got was like before we even incorporated the business. It was an $80,000 grant from the US. And once we did incorporate the business and the money came in, the government of India sent us a letter that we are freezing this money in this account forever and you can't access it. So that was like our first experience with getting money into the business. Not very pleasurable, and that money is still stuck, by the way. 10 years later, we've not seen it. But then we figured out that there's other ways to get this money in. You structure it as a service contract, don't take it as a grant, rookie mistakes. But anyway, the point here is that grant availability was a problem. We had to go outside to get the grant money. And grant money is the best money early on in your business. And in fact, not only early on, even when you want to try new things. Like today, we want to try new things, right? We want to try new technologies. We want to invest in certain areas which don't have the same certainty of returns as a regular business. Again, when I look around and see where is the grant money available for that, it's all overseas. Singapore, UAE, some from UAE, UK, US. Again, I think that's a big gap in India. There is not enough grant money available for innovation, really. So gap, we got money from outside, but big gap in India. Second is debt. Debt is, it's strange. I mean, I guess because of the nature of our business, we have long-term contracts, and the contracts are pretty good. So in debt, we didn't have any problems. In fact, without any track record, we got a 7-year loan from one of the Indian NBFCs, and at very good rates, like very reasonable, right? So with debt, we've hardly ever had an issue, I would say. I mean, of course, there's been dearth of local banks lending, and there have been hundreds of questions and people wasting our time. What is energy efficiency? What is this contract? Blah, blah, blah. But by and large, again, that's a short-term pain. But by and large, we've been able to get the debt capital that we wanted and always had a little bit more than what we need. Now, coming to equity, Again, journey-wise, 5, 6 years or 7 years into the business, we had never raised equity. We were like profitable and just using our money to invest more and growing also slower than what we should have. So we raised equity maybe about 6 years after we started. By that time, the business was sound enough to attract capital, and the short-term pain was that an investor backed out 2 days before signing the agreement, and we had to go back into the market and raise the money. But the good news is that we were able to raise the money in 4 months. And the set of investors is really good. Now, fast forward in time, now we are raising Series B, and the same thing happened. Investor backed out a week before the deal was supposed to be signed. But again, we are in the market, and we are seeing good signs that we'll be able to raise that capital in a reasonable amount of time. So, point is, this is part of life. This is how startups are, up and down, short-term pain. Overall, I think the funding situation is not bad. If you're a good founder and the market is big, it's huge. There's hardly any bigger market. I think we'll be able to attract capital.
Yeah, and on that note, I'm actually gonna invite some investors to come and share their perspective. So if we can have Shivadeep of Omnivore, Yash of Blue Ashwa, and Shantanu of Transition VC come and join us. Great. So I'm going to ask you to introduce your fund and what you focus on, but let me also tack on a specific question for each of you. So Shivadeep, you obviously are, one of India's well-known agri investors and also an early investor and supporter of EcoZen. One would love to understand your thesis, but also, having invested in the sector for more than a decade, what do you see the opportunity and the future of cooling investments look like from your perspective?
Sure. Thank you for having me. So very quickly on Omnivore. So we're a agri-food, climate and rural focused VC fund, early stage, seed to Series A. Been around for about 14 years now. Currently in our third fund. And have had the fortune of investing across multiple subsectors within these themes, including EcoZen. And kind of moving to your question around the space overall, I think one is I completely echo with what both of you were saying around time and patience. I think it does test you as a fund, and so much so that we have evolved from a certain tenure of a fund to now being a longer tenured fund, and we've been able to garner support from LPs to kind of being able to do that because of the sectors that we invest in. I think the challenge is a little more when it comes to companies which are building out new hardware. Hardware always tends to take a little bit of time in the initial years, so depending on how early or late you come in, that is an additional cushion that we think is required. But in the end, I completely agree that there is enough and more kind of capital to be made for any for-profit impact investor as well in the space. The other nuance that we have learned over the years, frankly, is that many a times it's also about the ecosystem kind of coming together. So you as a company or you as a equity investor might have a certain lens, but many a times if you don't have, let's say, capital which is available for you to do experimentation, to take on some FLDG losses, right? Blended finance is now coming in. I remember 7, 8 years ago when we were trying to have conversations about taking some of these products to markets, which are difficult and the customer may not have the upfront paying capacities. How do you solve for financing, for example? And that's not just an equity alone question. It's also for the other ecosystem players to come in. But that, I think, is now in a position where we're in a much, much better spot in terms of more and more organizations, figuring that gap out. And I think the next few years are going to be very exciting as far as we'll see a faster pace of adoption is our thesis for newer technologies, which was not the case. And so I think innovative financing is definitely going to be there, and entrepreneurs will probably be able to get to markets faster once they have PMF. That's kind of my limited thesis around, around cooling in terms of various technologies, and we'll chat more about it later on as we speak with others.
Sure. Yash, as you introduced Blue Ashwa, would love to understand more about, I know you do multiple forms of financing, so would love to understand more about that.
Yeah, sure. Thanks. So Blue Ashwa Capital, again, an early stage VC fund based out of Singapore and India. Again, doing seed to Series A. Largely a sector agnostic fund from a mandate standpoint. However, deep tech and climate tech has been a core focus for us. Almost 70% of the current portfolio is in this particular bucket. As part of this journey, while we have invested in this company at seed stage, same problems that all of us has faced with our portfolio companies or our own companies, where there is offtake, there is supply, sometimes this is not there, but that takes time and we need to be patient with that. In terms of what we are doing on the debt side, again, a learning which happened through our last 4 years journey while we were investing. There were actually two learnings which we tried to do with two different arms. One was on the deep tech side. When we were evaluating companies, we were introduced to innovations. We got to know there is a lot of exciting work happening at lab scale, and these folks needed infra, needed support, market linkages, and as a result of this, we started our own innovation arm, which is a lab center in Singapore and in India, which helps companies, or rather innovations and innovators, to take their technology from TRL 2.3 to 8.9 and make them market ready, which is a separate thing run independently. Second learning was, again, with regard to those companies which have figured out the product, have got acceptance from the customers, but the very nature of their business model required upfront outflow of cash, right? Which is something which most of us are doing and calling in different form of shape, but to summarize, it is CAPEX to OPEX, right? Your business model requires you to make things affordable, and hence there's initial outflow of money. So as part of our structured credit fund, which has been recently launched, we provide funding to companies, and this is sector agnostic, not just climate, but we have evaluated companies in EV fleet business, charge point operators, some of the energy efficiency plays as well, wherein we look at companies who are trying to do this model where their IRRs are good. Of course, since it's a first of a kind project, they don't have debt funding per se available, which is right now something that is available to you folks because you have proven your model. But there are companies who are struggling to do that. For them, raising another equity would be diluting very precious stake, and that's where we are trying to come in and see if we can take some kind of risk, if we can understand the technology, product, and economics, and see if things can be figured out. So that's something that we are doing.
And Yash, if you can ask a follow-on question, since you do deep tech investing, and I know you invested in companies like Tan90 quite early on, for example. Even when these companies have a product, one challenge we've seen is that often deep tech products tend to be more expensive than business as usual. So how do these companies navigate finding customer acceptance, and how does that work for you in terms of, fund duration and, how long these companies need to scale?
Yeah, so of course, affordability is one criteria. Second is awareness about the problem altogether, a different issue. So for specifically in case of Tan90, the initial challenge was, so they are trying to solve for cold storage on mobility. Challenge was that there are options available like reefer trucks, there are options available like dry ice. The question really was whether these solutions are best from health standpoint, are they best from flexibility standpoint, and of course from affordability standpoint. While in their case, they started with a model of product sales, trying to give their PCMs for an upfront sale to their customers. The struggle actually was how to use those products, then affordability initially, because it was not really a big order for them as well. They started very small, humble beginnings. But what they realized eventually was that to have a mass impact on their supply chain, they need to do two things. One is operate the entire, the supply chain with regards to mobility at mid-mile level, and second was to build up the infra. So they came up with a different form of CAS, pay as you use, wherein these folks were aggregating demand at one side, supply at one side, adding their own layer of infra and service. So, I mean, I can use a analogy here. It is like cloud infra, right? People had it in-house earlier. Then we are using folks like Google, Amazon, similar to battery swapping. So you put up the infra upfront, and your bet is that you will be able to reduce the cost by increasing the offtake by aggregating demand. And that's how they went about doing this.
Thank you. And Shantanu, if I can come to you next to talk about transition VC, but also would love to understand how you're building your investment thesis for cooling industry.
Sure. So, at Transition VC, we're a climate and decarbonization focused fund. So we invest across sectors in sectors like electric vehicles, renewable energy, energy storage, hydrogen, carbon, and then decarbonization of buildings and industry is the overall space that we look at, where cooling of buildings and heating of industry, process heating for manufacturing and other uses is sort of a subsector that we look at in decarbonization of buildings and industry. The overall theme is how can you drive a building towards complete net zero from an energy perspective, from a carbon emissions perspective, and then we look at multiple things within that piece. So definitely things like what Smart Joules is doing is enhancing energy efficiency through various interventions, through automation, through better equipment, through better integration, through better building management systems is one thing. Then how can cooling systems be very well integrated with renewable energy? So can we have a type of a thermal storage system or a cooling system that can use solar power or power during the day when the electricity is cheaper to actually store chilled water or any sort of chilled coolant in a thermal storage and then utilize that at night? And then finally, various types of building materials to enhance insulation, to enhance thermal efficiency of the cooling, various technology interventions to completely enhance cooling from a energy utilized per ton of cooling perspective. So those are the sort of technologies that we look at. We've not been able to make a bet yet in this space from a buildings perspective, but we have or are very close to making an investment in the industry space, which is essentially utilization of waste heat from one process in manufacturing and taking that waste heat and using it as an input in another process in the manufacturing industry, which overall enhances the efficiency of manufacturing. And that is one perspective from a pure technology solutions product standpoint, and then from a financing model standpoint and from a energy efficiency as a service or energy savings sharing model, I think is a very, very important model, and that's something that we look at also. How can these sort of financing models go deeper into the market? And that's from a simple perspective that, like you earlier pointed out, was when you give energy efficiency or energy saving or cooling or heating as a service, it tends to be the most optimum, the most efficient model, because you're looking at it from a per unit perspective where OPEX will play a major role, and you're not looking at it only from an upfront CAPEX perspective. You're just not trying to optimize CAPEX, and that's where the entirety of energy efficiency is truly shown, which also translates into a financially viable business model. And that's what the core fundamental was of investing in the waste heat recovery model. And I think that's the fundamental of what cooling efficiency is built on.
Thanks, Shantanu. So all three of you come in pretty early stage in the companies. And I'm assuming that availability of late stage capital or later stage capital is crucial, not just for the growth of your companies, but also from your exit and return perspective. How do you see that ecosystem evolving for Series B and C investors for cooling specifically?
Sure. I mean, I can give a live example sitting right next to me. But I think so. There are two things. One is that I think a lot of the companies, fortunately, in this space are not also overfunded, if I can use that word. So as a result, there is capital efficiency built in most of the companies that we have seen in the space, because there's just not been a lot of dumb money thrown at them. That helps, because by the time you get to a B, your unit economics are kind of set. And I think what we have seen is when you cross a Series A barrier, a significant Series A barrier, and maybe you're at a B, there needs to be that comfort in your numbers, that predictability in your margin growth, which any incoming investor would want to see. And as long as that's there, I don't think it has worked to a disadvantage specifically for any company in the hardware/cooling kind of space, or in this kind of an infrastructure-driven space. The other thing is also, I think overall India is going through a massive build phase across various different sectors and subsectors. So generally we see that there is enough and more late stage capital available, but they just want to be sure that they're getting into a company which is kind of course differentiated, but also has been able to figure out the early basics of its margin and numbers. I think that is one very key takeaway that we have learned, that while we had a period specific to agri, we had a period of hyper investments across the sectors, I think, not just agri in 2021. With that kind of subsiding, we also understand that it's back to numbers. So once you're at a B, if your numbers are good, I don't think there's a massive crunch, at least in our ecosystem or our LPs that we kind of work with. There is enough and more demand to look at such assets.
Yeah, and I'll just add one thing here, and it's relevant to cooling and can be extrapolated to a whole bunch of other sectors. India is not the land where the consumer or the client will pay a premium because it is more energy efficient or because it reduces carbon emissions. India is not the land which will pay a premium. So there has to be, for a successful deployment, there has to be a financially viable business model, financially viable product solution with an ROI of at max 24 to 30 months. And if you're able to show credibility, if you're able to show X amount of deployments where an ROI is achieved at less than 24 months, I think enough and more VCs now, late stage VCs, mid-market private equities, are getting interested in funding products and solutions that do very well from a gross margin perspective, or from a even in terms of a financing model. If they have a great IRR or an ROI less than 24 months, I think there is enough and more investment interest. But the fundamental basis is that in India, no one's going to pay for a green premium or an energy efficiency premium or a carbon emissions premium. It has to be financially more viable than the inefficient alternative in terms of a rupee or a dollar figure. And I'm sure Devendra and Arjun will completely agree with me here.
So just 2 points that I would like to add. One specifically from a deep tech perspective. So yes, there's interest in cooling startups. In fact, our portfolio company is about to close their next round. But the challenge that we have observed is, one, this business will always require infra building. The ecosystem is still trying to come in terms with that. They need to relearn their way of looking things where you are putting money in a asset. If the asset's ROI is good, it's a good investment. Full stop. So that's relearning is required. Second, from a deep tech standpoint, so when you are making a technology and you are trying to sell the technology, certainly your TAM will be smaller, right? So what you need to do is add additional layer of application so that you become a outcome which is sizable enough for a VC or PE like bet, which not a lot of people appreciate.
So if I can just ask all three of you one quick question before I open up to questions. Yeah. No, okay. So we heard how Deven and Arjun are both super excited about the businesses they are building, and we believe that the market is set to grow substantially. But as VCs and as early stage VCs, which segments and what kind of companies excite you the most today for building for the next decade?
So for us, it's more broader, not just cooling. I'll just go a little back and I say thermal solutions. Within thermal solution, I think we discussed most of the spaces, stationary, mobility, industrial. Of course, technology has a role to play in all of these. PCMs, other layers of IoT, AI can make efficiency. My bet is on anything which can give you highest impact. Highest impact is nothing but the most efficiency that you can derive from an input, right? And specifically, if the space that excites me the most is space cooling. And secondly is thermal storage, because if you are able to get that game right, I think you are disrupting a lot of things, not just disrupting, enabling a lot of things, that would be the right word, could be across all the areas that we discussed.
Sectors that excite us, like I already said, decarbonization of buildings and industry as a whole, where heating, cooling solutions, energy efficiency, platforms, financing is one of the subsectors, are parts of the thesis. And then, like you said, cooling isn't really a vertical, it's more a horizontal, and we've invested into a company called EMO Energy. They do liquid immersion cooling battery packs, and they're already seeing the benefits of how cooling can improve TCO for electric vehicles. And similarly, we're looking at industrial decarbonization. Similarly, we're looking at companies that use various sorts of technologies like heat pipes to very quickly extract heat from data centers, from processors. So we're looking at technology interventions across. We're more deep tech and IP focused, but yeah, I want to take a bet in finance and platforms as well.
For us, I think we come with a slightly more kind of bottom of pyramid rural lens as well in some of the themes that we look at. So I think apart from, of course, Ecozen, we're also kind of pretty bullish on the entire cold chain piece. So there's stationary and there's also logistics. So I think that piece is also undergoing a lot of change, both from a demand perspective. Financing has eased out, the technologies have been proven and all of that. And I think there are some interesting models and we're pretty close to investing in one of them. Apart from that, I think we are pretty, and it's not probably directly cooling, but we like to look at the whole kind of alternate materials space pretty closely. And the other one, as you mentioned, which we've already committed to, is a transition financing kind of platform called 2.0 Capital, which is helping SMEs kind of decarbonize and go up the energy efficiency ladder, which is kind of was a missing gap across industries that we kind of work with. So these would be like thematically the areas that we currently have focused on.
Thanks, Shivadeep. On that note, I'm going to ask if anyone in the room has any questions for our panel.
don't always get to meet people like this. So look, this is actually kind of going off of what you said, right? If we look at sort of a 30,000 feet view, under climate there is cooling, there is all the other kinds of problems that we're trying to solve. Capital would be required to solve these things, and capital is a finite resource, right? So what I'm wondering is, going forward, where do you see a majority of capital deployed within the silos of climate? Is it cooling? Is it trucking? Is it et cetera, et cetera? And how much of a zero-sum game is it? If we take a look at the entire development space, if I solve the cooling problem, am I leaving poverty on the back burner? Or if I'm leaving gender empowerment on the back burner, am I leaving trucking on the back burner? So how much of a zero-sum game is it, given that capital is a finance resource? And where do you see capital being deployed in the next 5 years?
Okay, so maybe I can, specifically for India and especially for climate today, I don't think it's a zero-sum game, because the pool of capital available for climate has been expanding quite rapidly. To put in perspective, a lot of DFIs, the likes of European sovereign entities, ADB, IIB, all of those folks have been focusing a lot of their energies on funding climate, right? It doesn't mean that they are ignoring equality or gender. That's an element of whatever they finance, but climate is becoming the primary focus for many of these. We're also seeing many new funds getting set up, which are backed by new kind of LPs, right? So the first waste sector fund in India was backed by corporations who use a lot of plastic, for example. We are currently working closely with a new cooling fund getting set up that is looking at cooling only, but also we are talking to agri-only funds, broad climate funds. So the universe of funds itself is growing. But in terms of where capital is going, I think it is primarily renewable energy transition and electric mobility at this point of time. About 80% of capital goes there. Our hope is that the share of other sectors, especially adaptation, which includes food systems, cooling, access to water, will go up over time. But we are seeing a significant increase in availability of capital for these sectors as well from an LP allocation perspective.
Just a quick clarification. If 80% of the money is going into, let's say, you said
Today,
right?
Yeah.
So why would you say it's not a zero-sum game in that case?
Because for large private equity or infra funds to deploy capital, they need to deploy capital at scale. So if I was to do a 100 million or a 500 million transaction today, those are the transactions that are available. The transactions in other sectors are smaller, which means that instead of deploying capital directly, an IFC would rather give money to one of these funds to deploy indirectly.
Yeah, and I'd also like to add debt deployment or any type of financing deployment in climate positive climate positive technologies, products, solutions that have a financially viable business model is definitely not a zero-sum game, because you are in the truest sense earning money out of it. So if for example, if I'm a manufacturing enterprise, and if I say invest 100 rupees in capex to enhance energy efficiency in some shape or form through better motors or better cooling technology, and if I say I'm saving 40 rupees a year, in less than 3 years, I recover my money back. And if that capital is, say, has a life of, say, 10 years, I have practically earned that much amount of money over 10 years. So debt deployment or finance deployment in financially viable business models or products or solutions across climate is practically earning you money. And that is the only model that will actually work in India, is something that I always stand by.
Thank you.
But I think, as Simi, you have mentioned that the workforce is highly impacted by the heat stress. So what are some of the cooling options? Because all the cooling options that we have seen is from the space cooling or from this. So what are the options that we can actually provide them or have for them? Because I think 90% of the labor workforce work in the outside space, and they are most impacted by the heat. Yeah.
I think last year when we had the heat in the summers in North India, government came to action and they had their technical textile mission to give a grant for apparels which can incorporate PCMs. So essentially, even right now, there are companies which are selling it for BOM. It need not be sold for the expensive. So it is basically a stuff that you can add in your apparel, or jacket, or your garment to make yourself cool or hot. This, of course, cannot be consumerized right now because we don't know how people will feel when they are in their casual clothes. But certainly, it can be incorporated in your uniforms for folks who are on ground working. That is something that a couple of companies are working on this. In fact, our portfolio companies providing that technology to one such companies who is trying to productize this.
So as he said, there are apparels which can be cooled by thermoelectric or which can be cooled by phase change materials and so on. So you can have a jacket which will be cold or warm depending upon it. That is one way. The second way is there is a cap which I've seen which has some kind of a solar, and then there is a fan which keeps throwing local cooling. This is more for the outdoors. For the indoors, like in my own factory, we used to do coolers. Like the guy is sitting and there would be a cooler, a micro zone for 4 or 5 of them. Now cooler has a challenge of humidity. The humidity is higher. The temperature goes down by 4 or 5 degrees Celsius to the ambient. There is another technology which has come up which is DIEC, direct indirect evaporative cooler. You use that, you can go even 4 degrees lower. So that is for large spaces which are kind of open, you can't air condition them. You can look at DIEC as a technology. Of course, for closed spaces, there is air conditioning, and even in air conditioning, there are technologies which are coming in, which are likely to be a lot more efficient than the ones which we have been seeing. So the solutions are evolving. Where there is lack of power available, solar has become a very economical and affordable option. Control systems have been built, or power systems have been built in a manner that you can run cooling systems without using a battery. Okay, energy storages, I think one of them covered that you can store energy during the afternoon when the sun is there and use it for the night as well. So all of these technology plays are coming in, and the best part is they are no longer very unaffordable. They are becoming quite a bit affordable. And one more thing which is happening now is that, like ASHRAE used to say that we need 23 degrees Celsius and 50% humidity. I think we as human beings might be even good with 28 degrees Celsius and slightly higher humidity as well. And I think the population which does not have access to cooling at all could be even okay with slightly higher than that. Okay, like I think a lot of us wear suits. A lot of us sleep in the night in blankets. That is probably the reason for global warming in a very different sense. But having said that, I think there are solutions which will happen also because people are understanding that you don't have to reach the ASHRAE recommended temperature for all sorts of population. So there's a lot of innovation which can happen the moment you start doing the trade-offs.
Offloading the equity in the initial year is a difficult task, and getting to raise funds through debt is also can be challenging at times. So my question is, what are the blended finance instruments which are available right now in the market, and as per the life of the organization, say someone who's starting the business 1, 2, 3 years into the business, and someone who's established as a decade-old business. So what would be the difference in the basically structure of those instruments, the time horizon of those of your investments into that, and to the gentleman who's already established the business, what are the options that you are seeing in terms of financing right now compared to when you started the business?
specific to the business that you are in. But as Arjun rightly mentioned earlier, you start with grants because that's the best form of money that you can have. Only to get at least to a stage where you can convince someone like us, early stage, to back you. Of course, that money is only to experiment with your GTMs, your pricing, your product, right? The moment you get the product right, the business model right, hopefully you'll have a Series A. Post that, depending upon the business model that you double down on, you might need some funding for that first project. I'm guessing in the context that we are in, it's infra funding, which I don't believe any bank or NBFC can give in first go, unless your contracts are as airtight as Smart Jewels. So you will need one guy to take that risk. And I think that is something that even we are trying to solve for with that structured credit fund. Post that, once you get that first of its kind project right, I believe you will get everything on your side. I mean, that's what every one of us spoke about, that PMF thing. So anything before that first of a kind project is PMF hai, PMF nahi hai. But once you execute that right, probably you can then decide what do you want, whether you want to dilute, you don't want to dilute, how you want to scale things up.
So what we have seen founders do for the first of a kind plans, yes, if you have a deep tech product, something in the lab, there are grants that you can take. But before you go to one of these VCs, we have seen that there is actually a pretty active and vibrant angel network that exists in India. Syndicates, family offices, all of whom have been quite active in funding very early stage young companies. But since you mentioned blended finance, I would say that, while that's great if you can get it, we haven't yet seen a business get significant or sizable funding unless they have a fully commercial, scalable, profitable business or a pathway to one. So if you are a founder who's building a business that has deep climate impact, but no hope of earning a profit, it's not going to get funded, no matter how much blending you can do.
So I will give you a very different perspective. It's not from blended finance as much, but about how to hack it. As an entrepreneur, say you're trying to build something which is very deep tech. Okay, that deep tech stuff is going to go and create some value on the ground. There will be some application which is there which you are thinking about it. Now deep tech, you have to do journeys of crazy TRLs. It's a long cycle. Continue doing that. Try getting grants and continue doing that. But more than that, stop being so obsessed about technology. I am from Kharagpur. I am like super obsessed about technology. This is my 14 years of learning. Be obsessed about the customer from the start. Figure out what is the simplest way you can start contributing to the customer, which your great technology would do few years down the lane. Okay, and start getting into the business. You can, if you are in the space which is around hardware, you can start making money today. Okay, you can go to an investor. Investor will see, oh, you're doing such good business. You understand the customer so well. You are able to provide some kind of additional value because of your understanding of the customer to the customer. The customer is liking you. And you have such a great roadmap of a technology as well. So investor will start wanting to be funding you even today. And tomorrow when your great technology comes, you have a great market base already ready. The insights which you get from your business is going to help you make your technology even better. Okay, so that is what my take on technology lab businesses products are. I understand that everybody may not want to double time, that I'm building the technology also and I'm also trying to do a business. But see, you have to end of the day decide whether you're a technocrat or you want to be a businessman. Okay, If you want to be a businessman, you want to run a company, this is the way. You want to be a technocrat, that is the way. Okay, you go in the lab and do that, and somebody else will come and be the businessman with you. So you have to have a businessman at all points of time if you want to be a business, is what my learning has been. So that is one on how to manage the capital. You can raise a great amount of funding, even in the early time. Okay, you may not have to depend on grants. Of course, grants can come by, and that is easy as well to get them. If you are a great technocrat, you are working on something good, you will get good grants. We also got it. Okay, but trust me, I think I will just repeat what Mark told me. Devendra, screw grants. They never come on the time you need them. Get the capital you need. Mark is managing partner of Omnivore. He told this to me in 2012, 2013, when I was saying, hey, you know, we are also working and there is a grant of MNRE which we are expecting to get. And he was like, dude, you don't know what you're talking about. I'm like, fair enough. So yeah, that's on the early stage of funding. Now coming down to how the situation is now. The situation now is that since the focus was always to build a business, we've been able to build a business which is not just scaling rapidly, because we have been focused on the customer. We are not working on our own fantasy that, hey, you know, I think this is a great business which is going to be. The customer is the center of it. So we know what the customer wants, and we are building something for that. So the business is scaling up rapidly. Unlike where you have make-believe businesses that, hey, you know, this thing will happen, this trend will come, and then this will crack. So that is happening. It is scaling up exponentially. That is one. Secondly, you're actually targeting and adding value, so it is scaling up profitably too. So today, you are not in a situation where you are desperate for money. So this is a very good situation to be in. Lenders are willing to work with you at your terms. And they will try to figure out that, okay, I'm happy to match this interest rate. I'm happy to let go of personal guarantee. Today, our company doesn't have a personal guarantee of any promoter. So that is the kind of things you can achieve. We have lenders who are working on a second charge as well, because they can't offer the competitive interest rate we want. We have said, then we give you the second charge. So you get into a point of a commanding position. You're no longer desperate for capital. You know, okay, I'm not getting capital. I can slow down my growth a little. But I get the capital which is fair, which is the right capital with the right set of partners at the right terms. So that is how, if you play the whole game upside down, you can play it in your favor.
I can add one thing though, Devendra, having known you for a very, very long time, since the early days of EcoZen, I think what's equally important is that when you are raising money early, you may not always get such great terms, right? And sometimes you have to dilute a little bit higher, sometimes your interest rates are not the best. But I've seen Devendra, Arjun, all the good founders make decisions that are in the best interest of growth, even if it means that they're not always getting the very best terms at that point of time, right? Because it's a negotiation at the end of the day, and the bigger you get, the better contracts you have, the better cash flows you have, it just gets better from there. Ranjana, I'm assuming we are absolutely incredibly off time.
This is only at this point. Before this was completely messy. We have even done deals at 18% interest rate. I think I remember paying 27% interest rate. I also remember signing off to a 1x plus participating preference. So all of that also happens. And I think only to tell you that all of that happened when I was focused on my fantasy land and not so much on the customer.
For a wonderful moderation, and wow, what a panel to end the day with. Really, really inspiring to hear all of you. Thanks, Devendra. Thanks to Arjun, Simmi, Yash, Shantanu, and Shubhadeep. So truly a great way for us to end the day. And at the risk of repeating myself, Simmi and Shravan, you've actually aligned a lot of stars for us today. So what an incredible day it has been. It truly felt like a sangam, bringing together entrepreneurs, experts, and investors under one roof. And we immersed ourselves in valuable insights and learnings. And with the collective wisdom in the room, we are hopeful that we can scale innovations with the life-saving potential this sector holds. So thank you very much, all the speakers. Thank you so much. I would like to just extend my heartfelt thanks to NEEF Funds, for supporting us in our efforts to build the narrative for the sector. All the efforts we are able to make in the last 2 to 3 years on the climate side are because of NEEF Fund. And I would also like to thank our wonderful session partners today, Climate Policy Initiative, Climate, Rehive. The sessions were so wonderfully designed and curated. We loved all the sessions. Thanks a lot to our wonderful audience who made it to the venue. Yeah, beating all odds. Such big conferences happening all around Delhi and all. But yeah, thank you. And staying engaged till the end. And before I let all of you go, I want to thank my wonderful team, of course. Just want to call all of you here. Please come in front, guys. Girish, I think, has already left. Neha for, wonderfully leading the team with your cheerful and wonderful outreach. Vidhi, Prachi, thank you so much for managing the show with your wonderful smiles and beautiful efforts. Prashant and Varun for your behind-the-scenes effort. And special shout-out to Mansi. Please come in front, guys, yeah. She's the rookie of the team, but yeah, she has a lot of energy. Thank you. And believe it when I say, Mansi, that this event would not have been possible without your efforts. Thank you for putting up with me and for working like a star. On that note, thank you, all of you. We'll keep coming back with wonderful sessions, and yeah, stay tuned for more.